Every trader has moments when they're sharper, calmer, and more in tune with the market. For some, it's the first hour after the open. For others, it's midday when things slow down. Some traders thrive in volatility, while others do better in balance. But here's the thing. Most traders never study this. They just trade whenever they feel like it. And that's why their results feel random. Welcome back to Trader's Audio Edge. Today we're talking about one of the most overlooked aspects of trading discipline: time of day. Your edge isn't just about setups, indicators, or risk management. It's also about timing. If you don't know when you personally trade best, you're leaving money on the table and exposing yourself to unnecessary losses. Think about it. The market has rhythms. The open is often volatile, filled with traps and fast moves. Midday tends to slow down, offering cleaner rotations but fewer explosive opportunities. The afternoon can bring another wave of momentum as positions adjust before the close. Each of these windows favors different strategies and different trader personalities. But unless you track it, you won't know which one suits you best. This is where metrics matter. Journaling isn't just about writing down wins and losses. It's about recording the context, what time you entered, what the market was doing, and how the trade played out. Over weeks and months, you'll start to see patterns. Maybe your setups have higher expectancy between 10 and 11 a.m. Maybe your worst drawdowns happen right after the open. That's not bad luck. That's information. And information is edge. Most traders ignore this because they want to believe their strategy works the same all the time. But the market isn't static, and neither are you. Energy, focus, and discipline fluctuate throughout the session. If you don't align your trading with the times when you're strongest, you're fighting both the market and yourself. And that's a battle you won't win. Let's get practical. Ask yourself, when was the last time you evaluated your performance by time of day? Can you tell me your win rate in the first hour versus the last hour? Can you tell me your expectancy during midday rotations? If the answer is no, then you're trading blind to one of the most important dimensions of your edge. The good news is, you don't need to reinvent your strategy to fix this. All you need is awareness. Start tracking your trades by time block. Group them into categories: first hour, mid-session, afternoon. Look at your metrics in each. You'll likely find that your profitability is heavily skewed to certain windows. Once you know that, you can cut out the rest and focus only on where your edge actually exists. Here's the deeper point. Trading is about sustainability, not just activity. You don't need to trade every minute of the session. You just need to trade the minutes where you actually have an edge. That's what separates disciplined professionals from amateurs who churn all day. Professionals know when not to trade. Amateurs don't. So here's your takeaway. Your edge might not exist at all times. It might be strongest in a specific window and weakest in others. If you don't know when you trade best, you're gambling. If you do know, you're building structure. And structure is what turns randomness into consistency.